Yes, hopefully it's not too redundant.
Hello, ladies. You're my CEOs. You're your own CEO. And this call is because I want to arm you with as much proactive info, intelligence that I can to position you amazing. So I want to say a few things, and then I'm going to introduce you to Jake Gregory, who, in my estimation, is the best lender. And the reason is because in my career, having closed over 1,000 deals, he's the one who, if my buyer back when I was in production would come in and I was on the listing side and the buyer would be like, oh, it's canceled. I'm like, oh no, go to Jake. And I'm telling you, Jake would get it freaking done. So he can help you in any state other than New York State. So you need to connect with Jake Gregory. And so 3 things. Number one, I want you to know that as an entrepreneur, you're empowered. And it's not like you are waiting for what your broker says. Your broker is responsible legally for you. True. We're not going to do anything against the broker, but you are an entrepreneur. So you need to be willing and ready to figure things out as they get worked out. Okay. And, okay. I want you to embrace the CEO mindset, say, I am embracing the CEO mindset, meaning you are here or watching this because you want to take your business into your own hands. Okay. And I want to remind you, I'm going to turn it over to Jake because I want him to, kind of share with you some things. I just want to set this up that the simpler you present the new paperwork and the new procedures to buyers, the more likely they'll say yes. Because remember, people do whatever they feel like doing. Okay. You feel like being here because you are. So therefore you are. So the point is when, I'll just say it this way, simplicity sells, complexity kills. Like some buyers couldn't care less about like what's going on. They don't know about it. They're not in tune with it. They tune it out. And if you say, you're ready. Okay. Did you hear about the lawsuit? Oh my gosh. It's so like, we are reeling here. We are, no, they're going to be like out the door. This chick can show me a house, but I'm not using her. Okay. Whereas the alternative is to say, yes, and this is the way you buy a house in XYZ town right now in this market. You ready? It's so exciting. Okay, here we go. And then you tell them and you minimize it. Okay. And my clients already know how to do that. So Jake, the reason that I wanted Jake to come here is because he is a forward thinker. He is a CEO. He empowers himself. Which is what we all need to do. Okay. So he is very creative. Okay. Remember, communication, creativity. That's where the endless, ruthless, unlimited money income for you, which means unlimited helping of people. So you need to be creative. So with that said, I asked Jake to come on as a lender because what I'm telling my clients is get with your lender, and I highly recommend Jake, and get a game plan ahead of time. We always want to be proactive. Okay. Understand the options. And some of you are in a title state, some of you are in an attorney state. So with that said, Jake, I just thank you for being here, Jake, first of all.
Absolutely.
And I want you to kind of lead us through this NAR changes from a lender perspective and what your plans are to really help your partners who are your realtors in helping their buyers.
Sure thing. So thanks for the kind words and the introduction. Always appreciate them. It's always fun to start with a joke, and the forward thinking and the CEO and always trying to figure things out is creating more gray on my face than I have had. So there's a cost to it, but I love it. I love what I do. So bear with me because one of the things Jan said, people remember feelings more than they remember the data. They'll understand the data. They'll use it for benefit, but they understand feelings. So I'm a lender. I'm somewhat of a nerd. I deal in numbers. So I'm not going to be dry, I promise, but there's information that I want to provide to start so that everyone is armed with things they see come across from lenders trying to get creative, where they're really trying to get some business, which you can't fault anyone for, but it doesn't necessarily put people at an advantage. So for full transparency, we were speaking right before this started about some things that are popping up where people are giving 1% for, seller help. For listing agents, that's great because you might be able to get both sides. You don't have to deal with any of this mess. But I do want to show what the impact is to the buyer because Sheila, you did mention when the discussion starts and we're signing the contracts and getting things done and they start shopping, that's going to be impacted. That 1% may not be there. So I'm going to share my screen and do the nerdy stuff first and then open dialogue, answer questions, because this is really going to be something that continues to evolve as everyone's figuring this out, from listing agents to buyers agents. And one of the things Jan and I were talking about was brokers are saying they're not paying commission to buyers agents, but I don't understand why it would be an issue for the actual agent to share commission. If they get the money and then they're sharing their commission, that's different than the broker paying, right? Which is what the lawsuit's about. So I don't know. You all are hearing a lot more about it than I am, but I see all the memes coming across. So I know the fear and frustrations out there. So if I can share my screen, I just want to show everyone a rate table real quick to understand. I think this is super important. When you're talking to lenders and you're trying to understand how rates work, everything costs a very specific amount. And then lenders will add their cost on top of that, which is how you get the rate and how you get the cost with the rates. And I think it's important to have full transparency with how this works. I'm gonna grab the right screen and move this over. I want to pull up I don't even know. So this is a 720. Can everybody see the screen first? Just making sure. I can't see faces. I'm sorry.
No, we're not seeing your screen.
Oh, wait a minute. Okay. You are, but it's nothing exciting yet.
There we go.
All right, perfect. So when we pull loans and we put all the information in from zip code, which can impact rates, to credit score, to residual income, all the things we plug in, this is a true rate table. If we had this person that's 5% down.
Jake, you're gonna need to
Yes.
zoom in on that.
Okay.
We're
All right,
not
hang on, let me
only
see.
old, it's tiny.
Not a problem. All right, is that better, everybody? Okay, all right, perfect. So this would be for a $350,000 purchase, 720 credit, 5% down. There's a loan amount. And this was 8.8 credit. I mean, so this is right now rates available for this specific buyer. Okay. When we see 100, that means that it's as close to no charge as possible. This would be a $50 charge at that loan amount with the 6.375 to date. Now, the rate that you're seeing is the rates we're getting from all the investors. And on this type of situation, we make 2.25% to the branch. The total income we make as a lender is 2.25% on this deal. I've got to pay my LOs 1.25%. It leaves 1% coming to the branch to pay for overhead, to pay for lights, payroll tax, technology, all the things that we do have to pay on a monthly basis. Okay. So when you hear about points, what a lender does is they'll go down and say, well, hey, if you want to pay 1 point here, we're at 6. If you want to pay 1.5, we're here at 5.875 and we can get down into the fives. But specifically what I want to show and talk about here is when a lender comes along and is like, hey, we'll give a point to the borrower so that they can have that 1% towards, buyer commission or whatever. 9 times out of 10, if they have legitimate rates they're providing and they're not overcharging to begin with, they have to go up this scale to find out where 1 point is. So let's say 6.625. Now they're providing 1% credit. So they're not truly providing a credit. They're saying they are, and they are, but they're making the borrower take the worst rate for that credit. Does that make sense to everybody? So if this specific borrower came to me and I'm like, hey, we can get you a credit for closing. Now I will say, thank God we have these now, because through COVID we had nothing we could get to provide credit to borrowers. They were just gone. Investors expected rates to refinance as soon as they drop. So they were collecting this money up front, no matter what the rate was. That's how investors were making money at closing. They were collecting that fee. And that's how they were able to still do loans. But now that we have these credits, you're going to start seeing people saying, hey, we'll give 1%. Well, that just means they're taking someone to the higher rate, and that's where their 1% is coming from. But really, the borrower is paying for it. They're paying a 0.5% extra interest rate to get that credit over the life of their loan. Okay. So when you hear things that you're like, wow, that sounds really good. We all know something sounds too good to be true. There's probably something that goes along with it. Doesn't mean we can't work that out and get everybody paid and make it make sense for everyone. But just, realize in those situations that a credit is the lender's going to start by trying to charge that person more on rate to provide the credit. And there's not really a credit being provided by the lender. Okay. So with saying that, I just wanted to bring that up because I do see some stuff going around. I see, gosh, CFPB has already ruled that, hey, don't do that. But I see some individuals promoting, let me stop the screen share here. I see some individuals out there. I've had some of my partners come to me saying, hey, my lender's telling me to go get licensed. You absolutely can go get an NMLS license. FHA did just rule that they're allowing dual compensation now. So if you are a lender and you are a realtor on the buy side and you do both transactions, then you can get paid both ways. Please disclose that to anyone you would do that for, because there is dual compensation laws. I'm sure NAR is probably going to have some rulings that they're going to come out with that in the future, because there's a big push from Nexus and some other folks out there to do that for dual compensation. It is allowed for conventional loans, and FHA this year just released it. Also, in terms of an important note here for this NAR settlement agreement, VA, the Veterans Administration, just came out and said that veterans are now allowed to pay buyer's compensation for representation, where that you could not do that in the past. But they realize what's happened, and VA has come out now and said that that is okay to do. The buyers of a home can now pay buyer's commission, buyer's compensation. Okay. So let me go through a couple things to help that are above board, not taking advantage of anybody. Lenders can add to our LEs, what we disclose. We can add buyer's commission into that. If you charge 2.5%, 3%, we cannot collect it. It's collected at closing by a title company. It is not a required fee, right? So it's not like a appraisal or credit reports or things that you have to buy a home on the lending side. But we can add it. Have that conversation with your lenders. Make sure they understand that section 1300, if you want to write that down, just to show your lender that you know what you're talking about. Section 1300 of your loan estimate, buyer's commission can be added. Okay. Now I want to start here, or take a pause here, to say, when you have someone that you're getting these agreements signed with, go ahead and get the agreement signed with, but make sure they go to your lender to have them underwritten, the assets verified. Even if they're getting gifts for these kind of fees and that kind of thing, make sure your lender validates and have this conversation with your lender. The people I send to you, I'm getting this buyer's agreement signed. I want to make sure that I'm not cut out commission for my efforts, right? No matter what home we buy. I want to make sure you can add this fee to section 1300. Now, we all know we come across buyers that we can get across the line that's hair thin, right? I mean, it's if they sneeze, they're not approved anymore type of situations, right? This is something we probably need to talk a little bit about. And Jan, this is more real estate side, and we discussed it before we started recording. But as a lender, and if anybody's watching this recording, I did not say this, but as a lender, there are certain things like repairs on homes and things that lenders do not want to know about because it can cause issues on the home, right? This could be one of those situations where, as a lender, I'll let you know that I had to move heaven and earth and change things and get reserves to a certain point, and they have to have gifting. And if we get any more gifting, we're not qualified. And these type of things do happen in our world. So if we have to do these things, it is better to have that agreement signed, but not part of the contract or anything your lender sees, right? You need to have that conversation with your lender and make sure they understand, I'm doing this. We can always run it, because when we plug that into section 1300 of the LE and our loan file, and we go to underwrite the loan file, then AUS, Fannie Mae, Freddie Mac, FHA, all of the underwriting places we have to send these loans to digitally, is going to take that cost into account, and that's going to be a part of the approval weighting, right? Everything in a loan file, from credit to address at times, counties, high-risk counties now, or something that loan dispositions are taken into account, reserves, how long they've lived in their current home, if they're a current homeowner, or they've rented, or they've lived for free. Rent gives you more positive weighting to verify than living for free. All these things have a weight. When we add more of a cost at closing and these guys don't have a lot of assets, it can be a negative factor, right? So if we run it with commissionable agent, buyer's agents comp, and we get we don't get an approval with all the tricks we know to pull, but then we remove it and we get the approval, that's a circumstance we need to figure this thing outside of the transaction. Okay. So have that conversation with.
And can I just say one thing? So that's why in my brain, okay, to make your lives easier, ladies, you want to convey to your buyers the importance of the fact that you vetted your lender and you highly recommend they use the lender. And if they needed an additional reason, it's because your lender, like the listing agents in your market, including you when you're a listing agent, you need to be sure that the lender is legit. And you say, my lender is so legit. So if you want, and if with rates coming down, more competition is going to happen, multiple offers, say, I highly, I can't stress this enough, that you really need to use my lender. You're allowed to use any lender, but I'd be remiss if I didn't state to you the importance of the relationship that I've established. Anyway, I just wanted to throw that in because it's super important.
And I want to, so I'm going through the messages to talk about some of these really quick. West Virginia, we're a title state. So that's where my branch sits. So anybody that does the loans has to be title attorneys. Having things done outside of the real estate transaction itself is nothing that's abnormal. Talk to your title attorney and just ask them about it, because we've done this specific stuff for real estate. We've had title attorneys recommend that because they know it causes issues from what they've seen on loan files. So please be comfortable with anything that is being said here, but check with your title attorney, because you might be surprised with them saying, I mean, if it gets you paid. As a lender, I only need to document and collect and get through underwriting what's needed for the loan, which are our required fees. I would like to add buyer's commission to everyone's loan file, but it's not realistic to think that that's going to work every time. So having a backup plan that your title attorney can explain to you and is comfortable with is something to do.
Yeah, and I want to just state, this is the equivalent of never giving requested repairs to your lender. Is that low integrity? No, it is not. It is the way it is. It is perfectly fine. Nothing that Jake or I would ever say is ooh, they're questionable. No, everything is above. So.
Yeah, we're not gonna, we've dropped loans because of fraudulent stuff that's happened, and we've lost loans and another lender's done it and I knew it was fraudulent and I'm okay with that. I'm not going to close a loan that's fraudulent, because that not only impacts my license potentially, but I could face federal jail. That's mortgage fraud if I knowingly move forward with a loan. Like the FBI investigates that stuff and they've done it. We've had the FBI reach out on a client's file that changes tax returns to get a loan. So, I mean, we're not going to do anything below board for sure.
Tanya,
Tanya, I
go
saw
ahead.
you raise your hand.
Tanya,
Yeah.
go ahead, real quick.
The question I have is, if we are not giving it to you and we're not putting it in the contract, how are we making sure that you as the lender know to try to add it to section 1300 in their loan, but not have it in writing somewhere? Like how are we conveying that information? Is it just a conversation between the lender and the buyer?
No, conversation between lender and you as the agent, really. So if I know that we need to try to add this on the file and then I go through everything and we add it and we're good, great. If I add it and we can't, I'll let you know, like, hey, make sure this is something that is between you and the buyer and given to the title attorney. So that's worked out outside of this deal, right? That's going to be
a title attorney, the closing attorney who does the
closing
paperwork
company
and everything, make sure that they can handle collecting that money and putting it on the Alta and debit, credit,
because
that kind of thing.
As Jan said, sometimes with your government loans, this is a perfect example. With government loans that the client's not happy with the roof and they're not going to move forward without roof repairs, but you don't want the lender to know because the appraisal's in and we don't want to cause any issues, etc. So the seller and the buyer say, hey, I want $10,000. After closing's done, I want that $10,000 so I can replace the roof, whatever.
So Jan, this is just going on our instructions to the closing attorney then, is that?
That's right. I mean, the closing company is going to know what's going on, or the closing attorney is going to know what's going on. So whoever you close with, they're your next conversation to have, right?
And the first one is just to the lender, can they qualify for the loan if we were to add that to it? If not, then it's a
Right, you want to
that-
find out proactively. So that's step one. Step two, and I mean, like even today, remember how I told you last week to talk with your lenders? And I would also say now, also go ahead and talk to your closing attorney or your closing title company just about this scenario.
So, yes, talk to your title company, make sure they're comfortable with it. It should just be like a roof repair. And for me as the lender, if all the conversation is, hey, I would like for you to add this for qualification, and I say I can't, and it goes away, I go off what's on the real estate contract. So whatever is worked out and agreed upon as a binding agreement between parties outside of that I don't know about, it doesn't impact the loan. It's not shady for us or illegal for us, and we're not going to come back and say, you shouldn't have done that. Give me that document. Like, we're not going to ever know. So it doesn't matter. It shouldn't matter to your lender, because our job is to go in and do what we need to get the loan done and make sure it's compliant and make sure that it matches the real estate contract and all the terms of the loan, and we're good. We're good
Hey,
on the real estate.
Some states have the buyer agent commission on the contract.
Yes.
So-
But if the buyer commission, okay, so we're looking at the contract potentially changing now with the NAR settlement, right?
Right, and
Right,
many
so-
of them have to include, the buyer agent compensation.
Okay. If that is a change we can't do outside of the real estate contract, and that comes across, we can't ignore anything written on that contract. So if there's not, this would be then a potential broker question, a title attorney question, et cetera, to see, this is going to be more like a private agreement then potentially, right?
Mhm.
If you don't have to write yours on there, or the listing agent's not going to pay, or that brokerage says no more, and the listing agent still can't pay that commission out of their commission, we don't have to, yeah, I like Tanya's message there. That's kind of where my head's at. We have to go by what's on the real estate contract. So if the real estate contract says buyer's commission to be, but it doesn't say where it's coming from for us, it might come up down the road, but for now, if they're paying you outside and it doesn't really state it's coming from buyer, then I don't need to really dig into that or care about that.
Okay.
But for me, that's a question I would have for any broker that's out there. And Jane, on your side, you can speak to this more, but I would say, what's the issue with a listing agent saying, yeah, I'm going to collect the listing income, but then I'm out of my money, I'm going to pay the buyer's agent, right? I don't
Right.
know why that would be an issue.
Right. So what Jake is saying, and then we'll get to you, Jill, is, if you write 5% on the listing agreement, then you can just give 2.5% on the closing statement, right? Is that what you're saying, Jake?
Yeah, if I don't know why it's not coming from the broker, then right? It would come from the listing agent's commission, and the listing agent would be the party paying a referral fee or a fee for bringing me a buyer. Like, I don't know what else to call it. Maybe we
Yeah, I
don't
like
call
the
it
referral
buyer's
fee.
agent comp anymore.
Yeah, I like the referral fee. Okay, Jill and Janet. What do you got?
This is such a great conversation. I just wanted to point out that we are no longer calling it commission. Thank the Lord. I was hoping it was going to be a service fee, but in the new documentation, what we have from NAR is compensation, which is fantastic because they've eliminated commission fees altogether.
Yeah,
Nice.
great. I like compensation.
I'm still going to call it a service fee, but in the contract, it's called a compensation. So we really can drop that whole commission idea, which I think taints the noble service that we provide.
Good point. Well, so to wrap up, ladies, and kind of get clear and concise on how we can help on the lending side. First off, we want to try to go through and underwrite the files with buyer's commission on there, just to protect everybody. Know we're good to go. If not, your lender should be able to explain why and go into details on appropriate steps and what can or can't happen. Right? That might be a conversation with the listing agent saying, hey, we need to figure out how commission is going to work if the buyer can't get through. Right? Having it on the 1003. So section 1300 is just it's a extra fee sheet. So sometimes you probably provide a real estate credit to get a loan through. The credit goes on section 1300. That doesn't pertain to what's needed. That's just a section of the loan estimate that defines what's needed, what's not needed, and how the different credits and charges are broken down. So section 1300, if you use that, it's just going to let your lender know, I know what I'm talking about. So they're
Right.
not going to be able to say, oh, XYZ and this and that. They
Right.
have to answer the question. Okay.
And I'm so glad you said it that way, Jake, because I want you all ladies to know you are the real estate expert. The lender is the financial expert. The closing company is the closing expert. Okay. So you are all equal. It's not like you're deferring to a lender and you're deferring to a title company. You are equals. Okay. Now I want to go to Tanya. If you are like, you are not going to be receiving 6 apples in 6% in this example, and then you're going to write off a check. The closing company or the attorney is going to be giving you 3 apples and the other person 3 apples. So that, just like a referral, you don't get paid out. You only pay tax on that which comes to you. Okay. Kelly.
Hi, Jake. So a question, I heard something yesterday and I wanted to kind of get your take on it. So let's say that someone is getting a conventional loan and which requires 5% down. And let's say under a buyer agency agreement, they're under contract for that buyer agency agreement for 3% and 3 apples. And the seller is only going to agree to 1, just steadfast, not doing it, right? So that leaves a 2% differential there. Is there a way to take that 2% from the 5% that they were putting down, lowering their money that's actually going towards the principal, right?
Right.
Is there a way that that can be done?
CFPB says no.
Really?
That is CFPB says no. That's the regulating industry for all lenders. The reason they say no is buyer's agent commission is not a needed charge to close on the home.
Right.
So the regulating committee right now says no. I'm hoping we come up with more ways. Now, as a lender, if it's a 5% down, they're a first-time home buyer, and they had that 5%, I may be able to flip them to a first-time home buyer 3% down conventional loan, which frees up 2%, and then they could pay. So we can't game the system, but we can change loans to try to work that out, if that makes sense, right?
And the other thing is, oh, go ahead. I'm sorry, Jake. Go ahead.
That's all right.
No, I'm sorry. I was just going to say, can't we just add it to the sales price? I mean, for 500 years, however long people have been buying houses in America, that has always been included within the sales price. So why can't, if in this case with Kelly, this example, can't we just add 2% to the sales price? Because that, you know what I mean? And that, because that's minuscule in a per month. Is that still allowed, or is that, because that would be the easiest way?
And is lender related question? So as long as the home appraises, you can do anything you want to. But then that agreement would need to change on the seller side from that 1% to 3% commission. It would still have to come out of that. The lender can't pay the buyer's agent for commission. You know what I mean? That's why it's in section 1300. When we get to closing, that's something that is done with the money that's left at the closing table from the title attorney. It's not any kind of compensation coming from the lender, because that would be added to the borrower's, payments or closing costs or whatever that is. And CFPB has said that no, it's not.
Right,
It's
because
not
on the closing disclosure, just like it is now, it'll show sales price, all their expenses, one of which for the buyer is, or wherever it comes it'll be on the closing disclosure like it is now.
Right. Yes, ma'am.
Sheila.
Right, so my question is, if, let's say that, as Jake just gave that example, it's first time buyer, 5% down, you get the offer accepted, and then all of a sudden you figure out, okay, we need to go through, and again, you talk to your your mortgage person, and he agrees that, yes, we can put some of your commission through that. When the appraisal comes, and the appraisal comes in at a different amount, so you're hoping the appraisal comes in at 95% because you're getting 5% down. If it comes in lower, I don't think you're entitled to get your money back, because now you're doing a 3.5%. Correct or incorrect?
It's a great question. It's not for the lender because we can't change the appraisal stuff. So I mean that's going to be a negotiation between the buy side, sell side, seller, buyer, and how that's going to work out. Because when we, let's say a home was 350,000 and we make it 355. And what we're doing on our end, so let me clarify that. If the buyer has 5% to put down, right, and we have a $350,000 purchase and we can get them the 3% down and still qualify, we don't need to adjust the sales price because the 2% they were going to put down is now coming to you. So we have to do nothing with the sales price in that example because 350,000 is still 350,000. We're just not putting 5% down. We're taking 2%,
Okay, I
which they
want to
already
stop
have.
right there because I never heard of a 3% conventional. Is that only for a first-time home buyer?
First time home buyer. Well, you can get 3% down on loans, but you don't get a lot of the specifics that come along with it. So you can do 3% down conventional, but you won't have reduced MI. You can't get the home ready and better rates, that kind of stuff. There are 3% down mortgages for home buyers that are out there as long as they qualify, but they're a little bit more difficult. You have to be buttoned up to get
Okay.
an approval.
And so that's another way to have that proactive conversation with your lender, just in case that, arises, that that's an availability for them.
And the second half of that, Sheila, is the scenario where we've got the 3% down approved, and the only way to get that extra 2% is to do the price increase. So if it's $300,000 and we got to move it to $306,000, and the home only appraises for $300,000, we can't pull the money from anywhere. So that's a negotiation piece between buyer's agent, seller's agent, because again, a lender can't pay any realtor commission. That's just from proceeds of the sale and what the money that's left over at the end of the transaction. So that's just something unfortunately has to be dealt with between the buyer seller parties.
So I'm an attorney state, and as soon as if your offer was accepted based on that percentage down, and if you change it at that point, the seller's like, I'm not willing to change my numbers. I'm going to keep your down payment.
But we would have that figured out. Like if we're making offers and the listing agent says, look, 1%, you're going to go in and have you're talking about the down payment percentage. We would already have worked that out during initial contract though. Now post contract, that's that negotiation part between both parties. Because on our side, if it's 300,000 and they're making the offer, you should already be aware of what the seller is going to pay in commission, that 1% at that point, right? So you're going to have already worked with your lender and had everything worked out to say, hey, to get the 3% commission, do we have that 3% option available, not 5? What's our options here? So we're going to go in at the correct purchase price at contract signing, and then just wait on the appraisal to come in to know if we have to renegotiate, or if it comes in above cost, we're good.
Yeah, right. Okay.
At that point, here, quick note, ladies, at that point, make sure your lender has disclosed that on that LE and they're doing that for that job, because it can come around and bite you ladies in the rear end if that's not disclosed. If we have to qualify them with that 2%, if we move them from 5% to 3% down and we don't put that fee in there and they're qualified, you're going to put your borrowers at a disadvantage, because if you're not getting paid and the deal blows up, whatever happens, then we can't provide a denial letter if they are approved off of what we've received and what we've submitted. If that buyer is approved, I can't just issue denial letters. So super important, if this stuff is negotiated, make sure to get lending documents. Your lender should be able to release the LE for you to see as well, because there's no social security numbers, anything like that on there. There's no borrower specific financial information on that other than closing costs, what they're going to pay. So to double check and protect yourselves, ask for that document when it's disclosed. Because even if we disclose it, we can do a COC and get it corrected quickly. But
okay, so LE is a loan estimate, correct?
yes,
At
ma'am.
what point should we be asking for that? Because
go
ahead. I was just going to say that lenders are like, I can't talk to you about financial matters. All that.
Come on. Ask for the fee sheet. They can provide, a lender should be providing a fee sheet because it's the full financial understanding of what they're getting into, from closing costs, the fees that are loan related, the points for loans. If a fee sheet is provided to a borrower, they can't hide anything. Okay. And you can talk to your borrower then. If a lender doesn't want to do that, okay. There's no specific borrower related financial information on there that's going to get a lender in trouble. It just means they don't want to disclose what they're doing. Okay. So a lender should be able to provide that to you. But even if they say no, ask your borrower to request one and they can share it with you to make sure it's on there. The fee sheet can be provided at any point in time. That's the document we use to give full financial details for potential buyers. before they go under contract. The loan estimate is the best effort for getting the most accurate information over. Once the contract's in, we have to get the loan estimate signed legally within 3 days, or we have to cancel the loan, but we have to have that before we can go to underwriting, order appraisals, that kind of stuff.
Yeah. And I just want to like to share with you that I can't tell you how important it is to have a lender. I like how Jake calls his realtors lender partners or business partners, because it's like when I had my team, like I would just say, call Jake. I don't have to know. Like, I don't have to know. Jake knows, call him. And it was always taken care of. And so, and I would tell my team, you know, you have to use Jake. Like, that's the way it is. Why? Because I didn't want problems. And when you find a lender who makes your job easier, hello, that means they, you know, the lender makes your buyer client job, you know, buying process easier. And I also want to share with you that when you're the listing agent, you still need to know this stuff, right? Because here's what I foresee happening. In order to get listings, people will say, I'll sell your house for 2% and offer nothing. And it's ignorant. It's ignorant. Because they don't understand what they're signing their sellers up for. So ladies, I believe, and this isn't a training on that, my clients already know this, is that when you go in, you share with them what it's going to look like to not offer buyer agent compensation. Ding dong. Hi, I'd like to see your house. Can I see your house? Because the listing agents who don't understand, they'll say, oh, I'll show every house. You know, I'll show it whenever a buyer wants to see it. Really? Right? But your job is to just tell the truth and say, this is why offering buyer agent compensation makes perfect sense. Right? This is how it makes your life easier. And again, the way that the conviction with which you speak, they will believe it. If you're wobbly, they'll be like, oh, I don't know. Right? And so when you are in competition, if they say, oh, we're going to talk to 2 or 3 other people, then it behooves you to bring this up. Because you say, you know, there might be somebody coming in here and promising you what seems like the sun, moon, stars, and shine, but here's why that's not in your best interest. And that
The perfect example there, 2 things on that, or 3 things now. Thank you. The perfect example of that is when someone wants to go buy a new build, a new home, and you've got builders out there as an agent, right, that are only paying you off base, or they're paying you off total. Which one would you rather show? Which one are you going to direct your clients to go see first, right? So when you're a listing agent, and if you're a listing agent and you go on MLS and you're sending listings over, you're going to push your clients in the past, that this is excluding NAR, but it's an example of that. You're going to push your clients to go see the one paying full comp, not 1%. I mean, it doesn't make sense to do my time and effort into homes that aren't going to pay me as much as others will. So it's a great point Jan just made there. Like, hey, tell your people, like, you know, more buyers means a higher price. We can potentially even cover the cost of 6% by offering that commission and getting more eyes. We're going to have more agents out in the field wanting to sell your home when you're the only home in this community offering buyer's agency commission, right? So I think there's really important. And if you don't want to, perfect. We can do the 3%. It might limit us. We can change it. If we go through 3%, we don't get a lot of bites. Let's change the offer. But I would always go in with trying to get more eyes on the property, because we know what bidding wars are like. They're great for listing agents, right? The item number 2. Now I think I lost the other ones. Getting with your lender and making sure they're sticky. If you're working with your lender and you send somebody to them, they should be saying that Jill and Christy and Tanya and Kelly and Jan and Penny, you guys are the best agent I've ever worked with in my life. Like, you're with the right one, right? There's so much distrust in our industry when you've got Uncle Joe that sells real estate and Aunt Mary and all these people that don't care. They're not going to take care of them the way we will. So anybody you connect them with to do a specific job should reciprocate that they're with the right person when you're going to go show them houses and get the deal done, right? The third thing, which just came up, and I'm really happy about this communication here, because I'm going to go back to my team and they're going to start doing this today. If we've got to work out the buyer's commission and I go underwrite a loan and I've underwritten it with the buyer's agency commission and I've got the approval anytime an offer's made, now granted, let me not say anytime an offer's made that I'm confident is going to get across the table, I call the listing agent before the offer comes across and I'll let them know it's a solid deal. Answer any questions I can. And we say, look, there shouldn't be any issues with this. Bargain appraisal, stuff we can't control, buyer's solid, right? I'm going to now add to that when we have it underwritten with buyer's commission, because we know when someone's going to make an offer, we already know what those standards are from what Sheila had said. We know they're paying 1%. We got to figure out the two. Well, I've worked that out in the pre-qualification at this point. So part of my conversation with the listing agent is, don't worry about the buyer's comp. What you guys have already talked about, we're good. We're covering it. Buyer's got the funds for that. It's taken care of. So I'm going to start adding that to calls that we have when that's the case.
You know how important that is? That's freaking awesome. That is so awesome.
We all want to get people in houses. When you guys get loans, your lender gets paid. So
and see, that's it. It's like, and so many mediocre many realtors, buyer agents, will say, well, it's their choice. They can choose whatever lender they want. Really? That's true. But if you know of an amazing lender and you don't push it, meaning disclose and share why it's in their best interest, then are you really serving them by not bothering them? No, you are not. No, you are not. That does not serve them. So, and Jake would always say, oh my gosh, Jan and her team are the best. Like you, and he would solidify that. He called it sticky. I never heard that. And we, like when we would get a buyer who said, oh, I'm going to use some online fly by night, lender, I'd be like, I mean, you can, but can we talk about why that may not be the best idea? And I would say, and we would all say, there's no better lender, period. We've closed hundreds of transactions. This is the guy, right? So the conviction with which you speak just will get somebody a feeling, and then they'll be like, okay. So that's just really important.
I like that. And there are, man, I come across agents that, brokers, I run across brokers a lot because they have to be above board and tell their team everything. I'm not saying it's not above board to say a lender, but I've got quite a few partners that say, look, I got to give you 3 names, but make sure this is one of your calls, and they'll do the card, or just as long as you tell them 3, it's fine. But you can emphasize, hey, make sure my favorite lender, look, they get it done. So you can call all 3. You can only call 1. It doesn't matter, but make sure this is one of your calls. And I think even that, if you're still not comfortable saying just use this person, because I get it, I get that, I've dealt with that, but you can, in a right way, if you have that confidence, say, look, here's 3. Make sure this is one of your calls. That the buyers understand. Like, all right, well, if they're saying that,
I don't.
And I'm not afraid of my rates.
I don't.
I'm not afraid of any of this stuff.
Yeah, sorry, Jake. I don't suggest to my clients offering 3 lenders. That, to me, that's BS. If you know one's great, like for doctors, pharmacists, and all that, yes, because like a banker, or rather like a broker lender, that in a normal lender sense, they might have too high debt to income ratio. Cool. That's why you need to have a broker lender. You need to have a banker lender, because banks would love doctors and pharmacists and people that have 100,000 in the high DTI. They don't care, right? So that's why you need to be the expert on who can best handle your buyer. But yeah, Jake, I don't agree. I mean, I know you were being.
Oh, that's cool with me. I'm just CYA.
Yeah, no, I know. Yeah.
I love it.
Yeah.
So, I mean, we can open the floor. Any questions, anything, and then I can.
Absolutely. And I really appreciate, could we just give Jake a round of applause? Jake,
Thanks, everybody.
before you
Thank
open up for
Thank you,
questions,
Jake.
can you please tell us how to contact you? Because if people here that are curious and want to talk more with you and your team, how can they get in touch with you?
Yes, ma'am. I will put my direct cell phone number on here. Wow, that was very country. I apologize. I will put my cell phone number on here, and not any of those like third party, whatever thing. So I'll put my direct cell phone number in here. Text me, because I'm on the phone or working constantly. So shoot me a text. You can call me. If I miss your call, please shoot me a follow-up text and I will connect. I'm happy to set aside any amount of time for questions, deals that you might need to save. I can do loans. It may not be in my name. Here's a caveat, but I'm still working the loans and I'm the one doing them in any state besides New York. So if you got a deal you need saved or you have questions, I'm here to help. But I'll put my phone number, my direct cell phone number, in the message here. Phone's always the best way. So shoot me a text. if my wife likes to keep my insurance policy up to date. So if you call me or text me and it's been 2 hours, then let Jan know and we can start
Yeah.
doing some research. But give me 2 hours if I do miss you, and I'll be sure to be back. I'll be back with you.
All right, raise your hands, ladies. We know how to do this. This is your opportunity with an expert in lending. Please raise your hand with any questions. This is your last call for the alcohol. And the alcohol is proactive readiness right now.
You're making it easy on me, everybody. Oh, Molly.
There we go. Okay, so how does that work where you're in all 50 states? So we're in Texas. So
Mhm.
would we connect directly with you, or do you have a partner here that our
Yes.
clients would talk to, or how does that work?
Great question. So correct directly with me, because our corporate office is, we're going to be everywhere besides New York. Okay. So what happens is someone that's licensed at our corporate office, someone at our corporate office holds all 50 licenses. So, or all licenses besides New York. So what will happen is I'm basically the loan officer assistant on the file, but I'm doing everything and it's his name. That's on the disclosures for compliance. So a loan does fund under them, it does show them, but they're not going to have contact with them. It's always going to be myself or one of my team members that's handling from first conversation to closing.
Okay, so that's my second question then. So what happens if you're on vacation? Like obviously you need
Oh,
time
I've got a
off.
team.
So
So we're
okay.
I got really exciting news coming. I can't drop too much, but myself and another top producer, a state over from me, are merging teams so that we can have lowest rates possible. We're going to be an $80 million group from just joining together. He's got some really good people that are coming with him. I've got really good people that are coming with me. We're going to have more of a footprint and more people to help. If it comes to me, I will get it to the right person. If I'm on vacation and we're partnered, you're going to know, but my phone doesn't. I can still text while I'm on vacation, so I'm not going to be MIA. But we'll make sure that everyone is taken care of. And let me bring this up, Molly. Jan said this too. My real estate partners are my clients. The people that we put in homes and we do loans for and that kind of stuff, they're your clients. They get us all paid. But it's more important for me to take care of you as the real estate agent than a single transaction is. So you're never going to hurt my feelings or my team's feelings by saying, hey, I don't like the way you guys do this, or you dropped the ball here, or whatever. I need to know. If it's me, I need to know. Even if it's not me and it's a team member, I need to know so it doesn't happen again. And we are here to plug into your guys' excellence and make you look as good as we can with what we do. Okay. So you're never going to hurt our feelings by saying, I don't like this or change this or whatever. I want the feedback
Yeah.
so we
And
can
I
get
want to
better.
say two things about that. Number one is that Jake and his operational back-end system is so good. Like he is in constant communication with your people so that if y'all decide to partner with Jake and his team, you will have conversations about how to jump on to his, touches. And then the second thing with respect to what he just said, that is why he gets a, 20 out of 10, is that one of his team members, just wasn't my cup of tea. And I told him that. And then he never put me over to her again. And I dealt with somebody else. So, and that's why he's open to feedback, because guess what? Sometimes somebody just rubs you the wrong way. It's not that they're a bad person. It's just that they're not vibing. So trust is 100%.
Another quick question on that too is how do you keep your partner agents in the know of what's going on? Because so many times our lenders just, you never hear from them as far as, hey, here's what's going on with rates today. Here's something new that's coming down the pipeline. Like we just don't get any communication.
Fantastic. How much time do you have? So it's kind of a joke, but real quick. So we have applications that are in place. So we have an actual app, right? So when you're logged into the app, you can see everybody that you've sent the app to or we've worked with that's connected with you, the entire pipeline. You can see if they're pre-qualified, what the lending stage is, et cetera. We, of course, have automations like every lender should to where, when the loan's submitted, the appraisal's in, the loan's approved, clear to close, all those milestone updates. You can see it a snapshot within our application, but you should also be alerted. The difference that I try to do is 1 day a week, every time that I set, Jan, I learned this from you actually when I first started in the industry. She Jan had a system I loved. She would, every buyer that came in went through the exact same progression. You do this, you do this, you do this. You don't do this, I'm referring you. I want the people that do this. And that's the difference in running a business or letting the business run you. I've been through the core and I've been through other trainings, but I've kind of taken the best of everything. So one day a week, I set 2 hours aside, and every loan that I have under contract, I call list buyer's agent first. We go over the deals that they have. Here's where they are. Here's what we're waiting on. Here's something to be aware of. We're good on this one, whatever that looks like. Call the buyers after the buyer's agent. Again, you guys are our clients, so you guys being in the know and understanding what the situation is before I reach out to the buyer is important, because if they call you with questions, you have the answers. Then I call the listing agent, which is the piece that most people don't. I want to talk to the listing agents because that's opportunity for me if they're decent at what they do. If they're paying in the, you know what, I'm good. I'm still going to call them, but I don't want a lot of that in my life. But I call the listing agent to let them know everything's good. We're just waiting on the appraisal at this point. We're on track to close. You have any questions? And that keeps the amount of back and forth and stress through the transactions down, right? So every part of my business I systematize, even leads coming over. I like having group messages. I want my agent to group text and introduce me to the borrower if they're okay with it, because then there's accountability. There's accountability to make sure the lender's communicating, the call's scheduled, things are moving along, and there's buyer accountability there, because you can raise your hand, and it's probably gonna be all of us. How many times have we heard they never reached out? They never called us. They haven't called me back. I called them, they didn't answer. And that's a lot of, that can just be cut out with one simple introduction in that manner, right? So we really try to make things easy. If somebody won't text us and group text us, they're probably not serious buyers. So over the time, everybody in my team works that way. It works. We try to systematize what we do for a great experience, make sure nothing falls through the cracks, take care of our people.
And when here's the thing, please raise your hand. Tanya, you're next. When you partner with somebody that is high level CEO like Jake, you become better, right? So he said he learned something from me. I've learned so much from him. And look, I've been out of production since 2018, and yet we're still in, and he helps me every time I buy, which is quite often. But anyway, so that's the point. You want to up level because you want to hang out with people who have the same high standards you have. Tanya.
First, Jake, thank you, because that's the level of standard that I have with my lenders too. And it's like, if you're not going to pick up the phone and make that call on behalf of my buyer when we're submitting an offer and explain why they're the best choice, like that's just a non-negotiable for me. The lender has to pick up the phone and call on behalf of my buyer when I'm presenting an offer. I make a phone call, the lender makes a phone call, all saying that this is the best choice and you want to work with us because we're a team. So I love that you proactively do that. And that's kind of one of the first questions I always ask the lenders, will you be communicating with me, or am I going to have to proactively call you? Because I will be calling you. If I'm the listing agent, I'm still going to be calling you, just if you're not calling me. So I love that you do that. So no wonder Jan loves working with you and has continued to sing your praises. So you had mentioned that you can do these loans, but there's somebody else's name, but it's under you. So how do you handle the appraisals? Do you have the access to the local appraisers? Because I know oftentimes they get they're just thrown up, but sometimes we get those appraisers that are from a totally different rural city and that they don't know what the market is right here. So that's obviously one of those things that's really, really important for us in most of our local markets, is getting an appraiser that is in and works in that area, not just from south of the city, a rural area.
Absolutely. So we have two options. Number one, we create our own appraisal panel. So I would ask my agent partners in that area, who do you like that you have a connection with, that you can introduce me with, or that you can give me a name for that we can reach out to and put on our appraisal panel? That allows us to control that. We have a local, it blows my mind. We have a local appraiser here that we've had removed because he likes to put in every stinking appraisal that comes out like, this is not my representation of the market and I expect the market to decrease. He's done that for like 8 years. And I'm like, stop? That's not needed. Just give me the value. So he's not been on our appraisal for like 5 years at this point. But we have the ability to create local appraisers. We have to have a minimum of 3. It's considered steering in our industry if we don't have 3 people that the order goes to that it can be picked up. We can have as many as we want. If you have 10 great appraisers in the area you like working with, let me know who they are, because we're going to at least get the 3 on, right? But we can pick not an appraiser, but a group of appraisers to sign up. We manage the appraisers then as a company. in your market. Okay. So the requests go directly out to them and not through an AMC. That doesn't stop us from doing appraisals if we don't have that group of appraisers, because we do have a Merrimack, which has been really good to work with as an AMC. So when we get the one-offs that we don't have an appraisal panel for, or kind of out in the middle of nowhere, we just put it through the AMC and we're getting appraisals back and set. Jan, how long's your appraisal taking this time? 5 days, 5 business days due tomorrow since we ordered? I
Yeah.
think it's like
It's
5 to
ordered.
10 days.
2 days later, the appraiser was in and it's due back today or tomorrow. It's amazing.
That's the next question. My follow-up is, what are your standard turnaround times for when you start the pre-approval process, getting somebody pre-approved? Do you fully underwrite your buyers before we start making offers, so we can write an offer with 0 days financing contingency? And how long is your time frame that you need, if not for both appraisal and
Yes.
financing?
Let me check with compliance just to make sure they're cool with us Xing out that financing thing. Because I mean, if a buyer loses their job and we say they don't need, there's no financing contingency, they're in a bad spot, right? And those are things that we can't control. So we got to be careful with that. Technically, yes, we do that. I think most companies at this point do underwrite up front. They send it in front of an underwriter. They do income assets, everything to make sure the loan's fine. We do that. Typical turn times, there's a 10-day minimum, by the way, because when you do LEs and you do CDs and there's a waiting period for documents to go out, be signed, and then waiting periods for the next closing document to go out, and then funding requirements, different things. So typically you're not going to find a lender that can do anything less than 10 days because of the time frame required for legal documents to go out, be signed, and waiting periods, right? We've done loans in 10 days. It's going to be highly dependent on appraisal, how willing and quickly the borrowers can get documents over to us. Outside of getting borrowers documents, 24 to 48 hours turn time with underwriting. The group that we are creating and the company that we're going to be with, there's no fluff conditions or feel good conditions. They have their Fannie Mae, Freddie Mac ticket, as well as Ginnie Mae. So that means that if we meet the guidelines, we can sell it directly to Fannie Mae, Freddie Mac, or somebody else. We don't have to worry about an investor coming back and saying, ooh, change this on the appraisal. Ooh, I don't like that, or this, or whatever. So it mitigates that back and forth, because we can just say that is going to Fannie. They've ensured that we can sell it to them. That's an important question to ask lenders if they have their Fannie, Freddie, or Ginnie tickets, because it provides a lot less stress with conditions some lenders see. Okay. So I mean, I would say 21-day turn time. If you've got multiple offer situation, let me know. I'll let you know if we can do 15, because that is competitive. People want their money today, not 5 days from now, right? So situational, 21 days or less shouldn't be a problem. We can do 10. If it's rescue deals, there should be no issue doing 10 days if we can get it done, because all the documents are in. We transfer the appraisal. We don't have to wait for it. We can do those really quickly. So I'd say 21 days or less is situational. We can get them through really quickly if you need to. 10 days minimum, 21 days max.
All right. Thank you, Jake. Anything else? We have like maybe 2 more minutes. I know Jake's super busy, like we all are. Wendy just joined us. Y'all will get the replay. Thank you, Shannon, and Christine, and Lynn, and Mary Beth, Terry, Wendy, Molly, Kelly, Christina, Penny, Tanya, and a couple who have already dropped off. Jake, in closing, how do you want to wrap this up?
When the wife texts you, respond. Sorry. So
Go ahead.
just relay the information to your lender. Make sure that you're getting the best service. Make sure they can accommodate you, especially with these changes. Even with us, it's going to be bumpy, because it's one of those things where we haven't been able to add it to Section 1300. We haven't tried to pre-qualify a lot of people by doing that. So it's going to be a work in progress with having someone that is open with you and willing to share what's working, what's not, why it won't work, and what you effectively need to do your jobs is something that anyone in this industry that's left deserves, right? So, just ask for what you need, and then make sure you can get it. I think
That's so good. Oh my gosh, Jake, that is so good. Ask for what you need. Ask for what you need. This is how I'm going to leave y'all. If and when, okay, because this body has feelings, you're feeling overwhelmed or out of sorts because people are saying things. Ladies, people are going to say things. They're going to offer, we can do this, we can do that. And what is that? What is that? That's over researching. That's not trusting, right? Because you're like not really sure. So you're going to, oh, let me hear what Susie's saying. Let me hear what John's saying. Here's the thing. This is a disruption. I can't even say. It's a disruption and a distraction to your business. That's why I'm bringing these opportunities for you, for us to chat. And I brought in Jake today because I don't want you to feel out of sorts. Guess what? We all feel out of sorts at times. But here's what I know. Going to somebody who doesn't know just means misery loves company. Oh, let's just talk about how out of sorts we feel. No, we don't have time for that. So now you're connected with Jake. You have me, okay? And so you do know. And you also have your gut to trust because each of you have closed lots of deals. And so it's time to be the CEO, step into that CEO identity. All right. Thank you, Jake. Thank you, ladies.
Thanks, everybody.
Bye.